Hello, this is Brian Resney, President of Resney Wealth Management. I'm here to bring an important update about the economy and the investment market so you can better understand what we see in the global landscape of investing and also how we're currently positioned within our client portfolios. You know, we made some substantial changes a few weeks ago in our client portfolios, basically putting more equity-based investments in our portfolio for one reason. Ben Bernanke came through, Mario Draghi came through, and basically you don't fight the Fed. Essentially what's happening is both sides realize the economies are weak around the world, and to basically stop the global slowdown, they are basically going to, in effect, print money or create monetary stimulus. This should help not only the U.S. economy, but the world economy. In fact, over the last couple of days, not only has the European nations basically announced quantitative easing or fiscal stimulus, but the Bank of Japan, we've got China, we have the U.S., we've got almost every major country out there effectively doing fiscal stimulus in order to basically get the economy moving in the right direction and move it a little bit faster. I think this is a huge net positive, and effectively what happens when you have monetary stimulus and printing of money, a couple asset categories have a real potential to do well. One of those categories is equity-based investments like the stock market around the world, and certain ones will do ultimately better, and I believe we are positioned in those. Also, commodity-based investments typically do extremely well, which are unrelated to the stock market. Yes, in our Global Tactical Opportunity portfolio, we've added commodities into our portfolio, and these are the 14 base commodities for well diversification, but also for the upside potential. I ultimately think inflation is going to tick up a little bit higher. We're not going to have hyperinflation in my opinion, but we're going to have higher inflation. And I believe the Fed is trying to reinflate the economy through asset prices. Commodities are one of those, and equity-based prices. I wouldn't be shocked if we continue through a year-end rally, and if they continue with the quantitative easing, which Ben Bernanke said it's an unlimited program to buy mortgages and push mortgage rates down. This is huge. Potentially they could spend well over $500 billion on buying mortgages back, which will drive mortgage rates ultimately lower. This will create more stimulus within the economy as you create more free cash flow for the end consumer. And this will ultimately hurt, in my opinion, long-term bonds long-term. We actually sold our long-term bond position in the TLT. And again, as I always talk in my video updates, our portfolio is not static. It's meant to go anywhere at any time. Meaning, if we need to be more conservative, we will. If we need to be a little bit more growth-oriented, we will. So our portfolio will go in the direction of various asset categories, whether it's conservative or growth-oriented or for income, based upon the direction of not only the economy, but also what the World Federal Reserves are also doing in order to either slow down or stimulate the economy for more growth. I ultimately believe my recession call that I had a few weeks ago is going to be put on hold now because of what Ben Bernanke did, what Mario Draghi did, China, Japan, and ultimately England. Remember, folks, if the information that comes in changes, you have to modify your thesis and your portfolio accordingly. Nothing is a buy and hold approach, and buy and hold, in my opinion, is a disaster when it comes to any type of investment category. When the information changes, you need to slowly rotate your portfolio, make those changes accordingly with which direction that information is coming and which direction is going to push various asset categories. As our clients understand, we don't invest just in stock or bond related investments, but we can look at any category around the world. Right now we're looking at gold. It still ranks about 7, 8 in our global tactical ranking system, so it's not in our portfolio because other asset categories are doing better, but it may show up there towards the end of the month. It does have our long-term market trend indicator on gold is positive, but again, we look at the top 5 assets categories. Those go in our portfolio because they've shown the best opportunity to outperform other asset categories over the same time frame. Gold may show up. Currently, it's not in our portfolio, but it is on our long-term market trend indicator on a buy. So watch your portfolios towards the end of the month. There could be a gold position they may enter. We look for more stimulus throughout the world economies. Obviously our unemployment rates that came out last week were terribly bad, and this is another reason why I think Ben Bernanke ultimately made his move, because he realizes we're really at 8% unemployment. We've been there for over 45 months. This is the longest we've been there since World War II. We need to grow the economy, and the only way you're going to do it is you need to have supply and demand balance, and part of that's going to be jobs. If you get people back to work, they make money, they make more money, they have the ability to spend. We're going to have a live TV show tonight at 6 p.m. throughout Southwest Florida. Check our website for details and station and location. Also, we will have a live show this Sunday throughout Florida and the world via the internet, of course. Check our website again for stations and times. If you're a client and you have questions about your portfolio, please call our office. If you're not a client and you want to become a client, call our office for a consultation. There is a difference. We invite you to experience it. Again, have yourself a very profitable week, and we look forward to hearing from you and any questions our clients may have. And also, if you're not a client, please call us for a consultation. It can't hurt to talk and get a second opinion. Have a great and profitable week.